Hey guys, Chuck Barone here, Friday, July the 1st, 2022, first day of the third quarter, and welcome everybody to the show. We have a lot to talk about today. These markets, it's just remarkable what's happening. I want to thank everybody for being here, for watching these videos and making the channel such a giant success it is already. We really appreciate you guys, and I hope that you're finding the information we're bringing to you every day useful. A special shout out, as always, to my friend Greg Manarino, his lions and lionesses. It's always great to have you guys here. Thanks for all of your support. Let's talk about these markets today, because it was quite a day. The stock market finished up today fractionally, less than 1%, with the Dow, the NASDAQ, and the S&P all having gains today. I think the market is, it's basically a tired market right now. It's getting whipsawed around with giant declines and then rallying back, and there's so much uncertainty in the market. I think that a lot of the people selling into this market right now are the smart money. I think they know, like we all do, that this recession is coming, and I think they're going to sell into all these bear market rallies right now. So stocks finished the week nice, had a decent week. Let's see what the week next, see what the news and what the market brings us next week. The bond market, guys, I really think we should organize an email blitz to the Pope to canonize Chairman Powell. There's literally a miracle every day in the bond market. I got to tell you, I've never, ever, ever seen anything like it. The bond market rallies today, the 10-year closing around 288, a big move under 3%. That's quite a rally in just a very short time, from 3.5 in the face of a recession, in the face of the Fed raising rates, in the face of this giant inflation. It's just, I seriously doubt it's we the people charging into this market and buying 10-year bonds. I just don't buy that. I don't believe it. With what we've seen in this yield curve, and the yield curve flattening itself out, somebody explain to me why on earth anyone would buy a 10-year bond right now? If you can get basically the same yield on a 2-year, why would you extend out an extra 8 years to get the same yield? None of this stuff makes sense. I think that we're all aware of what's happening. You got the Federal Reserve and the central banks around the world, the European Union, supporting the debt market. I think they're overbuying these bonds a little bit now, because it's just looking ridiculous. Honest, I've never, ever, ever, following this market since the 80s, have ever seen any kind of craziness like this. It's just remarkable. I think that the job they're doing is extraordinary. I just don't see how all of, bringing the rates back down is going to help with this inflation. Metals today, not a great day for metals. Gold down, but had a nice bounce. It had a low in the day of 1783, bounced back up, bringing it back well over $1,800 an ounce. Silver's under pressure, but it also had a decent bounce from its lows. It's closing, it looks like it's going to close under 20 today, so we're going to watch silver a little bit more closely, because there may be a little bit of a buying opportunity just to get a little bit of a taste for more silver coming up here soon. The oil market had a nice rally today, with oil up 2.5%, natural gas up 5%. I thought we might see a rally in oil. We mentioned it yesterday in the video. I thought a lot of the price pressure they were having was with the expiration of futures and options contracts. Looks like maybe we were right. I think oil still has room to move to the upside, so we're going to follow that closely for you guys over the next week or two and see how that market continues to move. The dollar was strong again today. The index closing over 105. The dollar's holding its own against the world's currencies right now, leading the way. I guess with our interest rates so much higher than euros and around the other currencies around the world, the dollar's staying strong. Bitcoin had a decent little rally today, up 2%, back above 19,000, and I think that Bitcoin might have a little bit more upside. I think it's going to test this $20,000 mark, which now is the resistance number, and I think that if it breaks through, there might be a little bit of room for it to run on the upside. So we're going to watch that and have a look at if Bitcoin can get back up above the $20,000 level. So these markets this week, just some crazy stuff like we've never seen before. Unprecedented action in the bond market. Honest, it's just remarkable. I've never seen anything like it. And I hope I never see anything like it again, because it just doesn't make logical sense. It's crazy. Moving on to today's remarks and commentary and information you need. I want to open on something a little bit on the lighter side. We closed the video yesterday to have a little bit of fun because it was so gloomy, the market. I asked everybody to finish the sentence. I trust the Fed as much as I trust, and left it to you guys to fill in. The response to this was remarkable. It was a lot of fun. I mean, I spent half the afternoon reading the comments and just laughing. You guys were pretty creative. The top 3 responses were Satan, my ex, or gas station sushi. Which all 3 of those would be, I don't want them. Some of these other ones were very funny though. I trust the Fed as much as I trust me not to drink a glass of wine at the end of a bad day. Not going to happen. No trust at all. I trust the Fed as much as I trust my girlfriend saying she saved herself just for me. I trust the Fed as much as I trust taking sleeping pills and X-Lax at the same time. I trust the Fed as much as a slippery bar of soap in a prison shower. This response, and so many of them, I mean, literally hundreds of people are responding to this. It was a lot of fun. I had a great time with it, and I hope you guys did too. It was a nice way to close out a pretty gloomy day yesterday. Very nice response from everybody, and we thank everybody for their comments and the response to it. Moving on to actual financial news today. I was watching the Bloomberg Comedy Hour this morning, and they were shocked that the Atlanta Federal Reserve Bank announced that their GDP was showing a negative 1% for the second quarter. Now, the Federal Reserve has different banks in different countries, or different cities and states, New York being the biggest, San Francisco, Denver, and all the cities around the country. The Atlanta Federal Reserve Bank is well known for this GDP Now tracker. It's an indicator of what the Fed believes GDP is doing. It's kind of a leading indicator of what we're going to see when they announce GDP for the second quarter. It's obvious now that GDP is going to come in negative. I think they're going to revise it to a worse number than 1%. And the reaction to the people on Bloomberg this morning just made me laugh. They were all so shocked. Oh my, oh my. Well, they were all shocked, but none of us should be. We've been talking about this from day one, that we believe we're already in a recession, and the signs were clear for all of us. You have this massive inflation where people can't even afford the basics of life, a place to live, to put gas in their car to drive to work, food, all the basics of life. You have this gigantic bubble in both the debt and assets, and it's just so absurd that even used cars are going up in value. Where is that going to end? You have a dysfunctional government who's going to be no help to us whatsoever. You have a terrible Fed. Powell said something the other day that really made me laugh. He said, we're just starting to understand how little we understand about inflation. Only a government person could come up with such gobbledygook. We have geopolitical issues, this big war with Ukraine and Russia, draining the U.S. Treasury of billions and billions and billions of dollars. It's upsetting everything all around the world. You have China and their geopolitical threat. You have, in the United States, basically a zero or negative savings rate. We have zero tolerance in this country, it looks like, for higher interest rates with the giant debt society we live in. I was reading some really interesting statistics. It said that the percentage of people who have any money left over after they pay their bills fell to less than 52%. How can that be? They're saying that basically half the country, after they pay their bills, has no money left. At the same time, credit card issuers have issued a record number of credit cards this year. The percentage of people that are saving money is near zero. People are living paycheck to paycheck, barely, it sounds like from this statistic. They said that more than half the population could not handle a $400 emergency without going into some kind of debt. Things are pretty shockingly bad for everybody around the country, and they're shocked that we could possibly have a recession. Well, they built this this finance society, or finance economy, consumer economy, where, consumers are going to lead the economy. We're not going to build stuff here anymore. And then they're shocked if the consumers stop spending. Well, can't spend what you don't have, federal government. So, we have to figure this one out. I think we have some really serious problems coming up on the horizon for this economy. We've been talking about it since we started this blog, to get yourself in a defensive position. I couldn't stress that more than I'm stressing it right now. We're going to have a big correction in real estate, and the vast majority of people in this country, the really only net worth they have is the equity in their houses, and that's about to get knocked out, if not a little bit, completely. So it's just not a lot of good things on the horizon for the economy, guys. We need to really, really suck it up, be disciplined with our money, be thoughtful, try to hold on to save as much money as you possibly can, get yourself prepared for the worst. We've been talking about stocking up on durable goods, stuff that stays good in your pantry, canned goods and rice and beans and stuff like that, just in the event of food shortages or some kind of issue with food distribution. I think anything's possible right now. And another thing that's really been kind of driving me crazy is the situation with this war in the Ukraine. Does it seem to you like it does to me, like Biden and the military-industrial complex really want us to have a war with Russia? You got this. Have you heard about this new oil price cap, where they're going to try to cap Russia's oil at the cost of production, which is about $10 a barrel? I'm guessing Russia's not going to go along with that so great. America's pouring billions and billions of dollars into the Ukraine and helping them defend themselves. Not that I'm saying that's wrong. It's just hard for us to afford it. Now you have NATO expanding with adding Sweden and Finland. Finland sharing a very large border with Russia. So now that we're bringing NATO right to their doorstep. You have all of this stuff that the United States is doing being announced in the press. United States intel helps Ukraine sink Russian flagship in Black Sea. United States intel helps helps Ukraine kill Russian generals. Here we're going to send these missiles. We're specifying how much, what we're sending them. You got all these crazy things being said by the Secretary of Defense and the military people, as well as Biden. We're in this as long as it takes. I'm not saying that helping Ukraine is something bad. I'm just saying that, imagine if in World War II we were announcing all of our plans in the media like that. If we were talking about all of the military aid specifics that we were giving England during the war. I think a lot of this is intended to provoke Russia. I don't see how this helps the cause of peace, if that's really what they're aiming for. So that's something we're going to watch out for, because when you try to have a big military and you try to have a big social thing with your people, that's what got us the first inflation in the 70s after Vietnam and the cost of that war. If they're going to try to spend the kind of money they're spending on this venture or this adventure in the Ukraine, I don't see how that's going to help with this inflation picture we have here at home. So there's all kind of stuff on the horizon for us to be talking about, guys. In the meantime, that's it for today. We've had enough. We got a beautiful 3-day weekend coming. We got the 4th of July to celebrate on Monday. Everybody go, have a great time this weekend. Put your troubles aside. Put this economy and all the craziness that goes with it aside. Really take some time, relax, refresh your mind. We'll be back next week. And I'm sure we're going to have a lot to talk about. So I'm going to try to take my own advice and really relax this weekend. And we'll see you guys again next week. Thanks for watching. Thanks for your support. Bye-bye.